Hello and welcome to Business Insider with Mario Toneguzzi on yyccalgarybusiness.ca. Joining me today is Mason Lam, who is Associate Vice President for commercial real estate firm JLL, Jones Lang LaSalle in Calgary. Thanks for joining us today, Mason.
Thanks for having me, Mario.
Well, you folks put out some interesting data in a report just the other day on the downtown and suburban office markets here in Calgary. Let's talk first of all about the downtown market. I see its vacancy rate is 25.7%, up 9 basis points from a year ago. Negative absorption for the year of 692,000 plus square feet. Tell me from your perspective, Mason, what you're seeing in the downtown market these days.
That's a great question, Mario. And I think with the our numbers here, the 25.7% vacancy, it's a little bit misleading, at least just to look at that number in its whole. So I want to paint a little bit more of a contextual picture, if you will. So first off, looking at the commercial market, you're really dealing with commercial tenants that are involved in the Calgary sector that really want to drive shareholder value. Especially at a time like this, you're trying to deliver stakeholder value, shareholder value. So for a lot of these businesses, when they're actually looking to generate revenues and look for cost savings, one of the things they look at naturally is real estate. If they're currently located in a B and C class assets, and what they can take advantage of is an A-class market with depressed rental rates that are comparable to what they have, then why wouldn't they go about in doing that? And so that's one of the main issues with painting that number with the 25.7 is that what you're seeing is a flight to quality here. And what these new buildings have is better HVAC, better floor plans, and they plan out more efficiently. And my second point here is that over the past couple of years, we've seen a lot of the demographic shift away from kind of an older generation where a lot of them, due to the recession, are getting packaged out early. So it's a big shift, especially here in Calgary, to a younger demographic. And as a result of that, a lot of this younger demographic, just anecdotally from what we've heard, is that they're a lot more driven by amenities, convenience, location.
Yeah.
In fact, a lot of them derive their identity and almost the worth of their current occupation off of which buildings they're located in. So due to this shift, what we've seen is that landlords and employers are taking notice. And as a result, this flight to quality is really driven by two main factors, which is first, it's about the same rate to be in an A-class building as it would be in a B and C class, all things being equal. And your employees now are demanding it. Your talent is demanding it. We've seen a lot of head offices start shifting into the downtown core. So yeah. Going back to the earlier point of why the 25.7% is misleading, because when you break down the statistics, our West End is about 40% vacancy, whereas our center core is more like 20% vacancy. And if you even look at just the Headley's vacancy, you're looking at maybe around 12 to 13%. So what's happening is basically just a shift into the center core, and whereas the West End is really the problem here, which I believe the city and the province and the private sector altogether needs to address.
Okay, super. And what's the outlook? As we move further into 2021, what's the outlook for the downtown office market? Do we see that vacancy rate continuing to rise? Do you think over the overall vacancy?
This one, it's an interesting question that you pose, and without my crystal ball or being able to look in the future, it's a little bit tough to plan. I mean, at this point, we can't even get our vaccines figured out. So I think figuring out real estate is a bit secondary here. But from what we've seen in the market, there's a lot of enterprises that are driven by the private sector, and a good example of that is the Access Alberta. I don't know if you've heard of this before, Connection Silicon Valley. So this is actually being driven as a mandate by a fairly large landlord in Calgary, and as well as some construction companies that are local that have actually hired a company down in Silicon Valley to start cold calling a lot of these companies. And this is an example of an out-of-the-box thinking where they're looking to diversify. They realize the writing is on the wall. As much of a proponent as I am for oil and gas and our entire industry, I think that's one of the drawbacks of Calgary, is that we were so privileged to have such an outstanding industry kind of provide us with so much financial assistance and support for so many years that we fought literally to diversify. And I think this is our chance. And an example of this would be the connection Silicon Valley, where they're now attracting a lot of these tech companies to start looking at Calgary, because one of the main variables, which I found fairly interesting, is that it's less competitive here. Who would have thought tech is less competitive against oil and gas? But it's because they won't keep on getting poached. So my understanding is that there's a lot of individuals in tech companies that do a lot of jumping because they get a new job offer, they get poached to do something different. Well, at this point, I mean, Calgary doesn't have that much competition. So when they relocate, say, an engineering and R&D development arm here in Calgary, you're not likely to lose them, and you're actually likely to get a little bit more longevity out of them. So in terms of how our downtown will evolve, I believe with the direction such as these private enterprises, and as well as the OSIF fund, the Opportunity Calgary Investment Fund, which I think is a great initiative by the government to attract more of diverse tenants into our downtown core. Is going to be our future. And that will be something that I think we definitely need to keep an eye on in the public and continue to support.
Okay, let's take a look at the suburban office market. The overall vacancy rate there in the fourth quarter of 2020 was 18.9%. Negative absorption of 566,000, just over 566,100 plus thousand square feet. Same dynamics happening in the suburban market as they're happening in downtown, or is there something different there?
The suburban market is a little more buoyant in the sense that you notice that their vacancy numbers are quite a bit lower compared with downtown, but that's only because they were not oil and gas driven. They were not nearly as energy driven. A lot of them were supporting industries or periphery industries, a lot more different types of law firms, accounting, consulting firms. It was just a lot more diverse. The challenges that the suburban market faces is a little bit different than the downtown. They have less of the big high rises, the big kind of A-class quality space, which again goes back to my earlier point. If you're seeing the shift in demographics where a younger generation and a younger population is demanding it, then I think that will be the challenge. Is if you're going to be a tech company, and a lot of them prefer to kind of be on, at least in the major metropolises, they don't like to be necessarily downtown because typically they're priced out. But in Calgary, it's actually the polar opposite of that. It's actually cheaper at this point, notwithstanding parking, to actually be located in downtown than it is in the suburbs. And not only that, because your employee base actually demands convenience and ease of access and having nice buildings, it actually, that I believe that will be the challenge for the suburbs, is this continued flight to quality, and in particular to downtown, because downtown will continue attracting a lot of these tech companies because there's so many incentives out there for them. The suburban market will remain buoyant just because it's more diverse. And, you know, there's always going to be people that need manufacturing facilities or retail facilities, whatever it may be, that the downtown cannot service. But I believe we've reached a certain threshold where the value is derived from downtown and no longer suburbs, where it might not be as convenient for a certain demographic.
Okay, super. Well, thanks very much, Mason, for joining us today.
Thank you, Mario.
Okay, that was Mason Lam, who is Associate Vice President with JLL in Calgary. This has been Business Insider with Mario Toneguzzi on YYC Calgary Business.ca. Thanks for joining us today.